What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 45. It's December the 13th, 2023. We made some trades today, so let's get into it. All right, so the first thing we need to talk about is yesterday's closing price, and that's represented by this purple line down here towards the bottom of the chart at 36,969. So let's go ahead and talk about trades 1 through 3 that led up to the PPI release this morning. So at trade 1, I went long here towards the bottom of a range that we were trading in between these two blue lines. So the bottom of the range was around 37,000 and the top of it was around 37,030. So I went long here towards the bottom of the range. Only thing was I bought a little bit too early and a little bit too high. Now this trade eventually ended up being profitable for me, but in the long run, this is just not an entry I feel like I should be making, because if I'm trading the range, the one thing I want to do is make sure that I go long as close as I possibly can towards the levels of support, towards the lows of the range, which was 37,000. I ended up going long at 37,006 right here, which 6 points is not that big of a deal on the Dow Jones in normal market time. But because this was pre-market hours, 6 points makes a big difference. So you got to still always remember that even though you see your setup that's present, you still got to buy it at the right place at the right time. Now, luckily, I made profits on this one on trade 1, but over the course of maybe, let's say, a sample size of 100 trades, I don't think this would be something that would be consistently profitable. So that's something I got to clean up. But nonetheless, that's where I enter, and that's where I went long at right here. I went long here because I saw prices bounce off the bottom of the zone right here, and you could say this was a higher low, but it's questionable. I was forcing it a little bit going long right here, but this is where I entered right here on trade 1. So then prices came back down to the lows of the zone, and that's pretty much where I got trade 2. So I added to the long position at trade 2 after prices hit the bottom of the range, and then they made a higher low at A. So that right there, trade 2, is how I should have been looking to enter on trade 1 at entry point number 1. Because right here, I had the confirmation that I needed and not just an idea that the bottom of the range will hold up. So I had the idea, but then we see prices bounce off, create that higher low, come back to retest that support level. So anytime I'm trading a range, if I'm looking to go long towards the bottom or short towards the top, I don't want to just jump in because I feel like that's the way that the market is gonna go. I want to make sure that even though I feel like the market might move up from here, I still need to see my setup, and that's exactly what I did at trade 2. So that's not bad. So I let these trades run, and eventually I was trying to let it run to the top of the move, but before we got there, that's when the news came out at 8:30. So I was like, man, I was hoping when I opened this trade at 1 that the top of the range would get hit before the news came out, because even though I do have a good idea that more than likely prices are going to continue moving in whichever way makes sense as far as price action goes, it's just going to have a very quick move up to those levels. Even though I felt like that, it was still too much risk for me to carry that trade into a news announcement. So once I took trade 3, and I added to the long position here as prices broke past the resistance of lower high number 1 right here at the blue circle. And then I closed the trade early right before the news with the profits that I had at the time. Now, this is a good lesson, I believe, in just discipline and not letting greed get the best of you, because the greed part of me wanted to stay in this position because I know that if I enter long at the bottom of the range, I should not be taking profits until we get back to the top or very close to it. So that was my mindset on one half, but the other half was like, okay, Ty, you already have very good profits. You're in the pre-market. The market hasn't even opened yet, and you're already making profits. Why don't you lock that in, then come back for the New York session open at 9:30 and just wait for whatever setups you like to have? You know, don't let all of these trades that you have come back to break even or worse. Because the thing about it, when you're trading a position and the market news is about to come out, don't think that your stops will be the protection that you need to prevent you from taking a loss. Like, let's say I did put my stops at break even, right? So I think after I got into all of these trades, my average price was around 37,000, and I want to call it 8. So imagine if you had your break even stop at 37,008. You got to remember that stops are limit orders, which means that the market will give you the best price that it can at that time, but it's not guaranteed to give you the perfect price that you put your limit order at. Most of the time, that's how it works, because in most occasions, the market won't be super volatile like it is during a news release. But on occasions like that where prices spike, your order might get filled maybe who knows how much further below whatever you wanted your price to be. So let's say I had my break even stop at 37,008. If prices were to spike to the downside, that order might have got filled at 36,980, because that's how limit order works. They'll try and give you the best possible price that you can, which is the order that you put it for. But if they can't do that price, they'll give you the next best price that comes around. And in times of high volatility, sometimes price can skip all the way down to a level like 36,980. So you might have to take a loss that you were not expecting. So that's one of the main reasons I get out of my positions when news is coming out, because it's too risky. And at the end of the day, you really never know. You have a good idea, but you really don't know. So that's pretty much the methodology, the thinking that I had behind trades 1 through 3. And I think I played that fairly well. The only thing I would say is that entry point number 1 needs to be cleaned up. I got to take that entry towards the lows of the range. So that was part 1 right here today, the pre-market session. So let's go ahead and move on to part number 2. So part number 2, before I even talk about this, let's talk about overall, like, what you should expect on an FOMC type of day. So from my experience, what I've learned is that the market will give you one of two things. It'll either give you a very volatile trended market or a very slow range bound market that barely moves at all. And it'll usually give you one or the other. And sometimes if you have one in the morning, you'll see the opposite in the afternoon. So notice how today we had a very range bound market. Didn't really move too much. We played back and forth within the same amount of prices for a good amount of time, and we didn't really see too much of a trend. So that just tells you that when the news does come out, it's probably going to be a massive move, either up or down, but prices are definitely going to be moving. On the flip side, if you come into a FOMC day and prices are moving and shaking before the announcement comes out and it's very volatile, expect for the volatility to not slow down completely, but just slow down a little bit once the news comes out. At least that's my experience so far when it comes to FOMC sessions. So today, during the morning session, we were having a very tight trading range, trading within this range between 37,000 and then 36,920, and we established some little micro ranges in between, and that's pretty much what led me to trade number 4. So notice how we made higher low A right here, and then we came back to make higher low B right here. So if we read the notes, it says prices were trading in a zone between higher low A and higher low B. So I bought at the lows of the zone, and then I exited at the top. And that's exactly what I look for when it comes to a zone. If the zone is clearly defined, I just want to trade in the direction that prices were moving before the zone was established. So if we look at this long tail candle wick and this double bottom down here, we can see that prices were moving up before they established the zone. So therefore, I only want to look to take long trades towards the bottom levels of support for that overall zone that we're talking about. And then if I want to exit, I just get out at the top. Now, this was a great example of how sometimes, even though you get out where your trading plan tells you to, sometimes the market can keep running. But it's not really about how much you can get and how much you can do. It's about following your trading plan down to the T. When it comes to a zone, I traded trade 4 the exact way that my trading plan called for. So I'm happy with that. And after that, I was like, you know what? I could sit here and continue to try and force trades because, you know, I saw some good setups. We had a higher low failure occur right here. That could have gave me a nice scalp target back down to yesterday's closing price, followed by a higher low on top of a major level of support, which was yesterday's closing price right here at this green ellipse. That took prices all the way back up to the bottom of the zone that we were trading from the pre-market. So it was opportunity available, but I was just like, look, I know it's probably gonna be crazy when the FOMC statement comes out. So let me just wait for a time period where I know the volatility is gonna be off the charts, because that is where I can make the best opportunities work for me. So I just chilled out, stayed at the market, just observed what was going on to kind of get a good feel as to what we might see as FOMC news came out. And then that's what led me to part number 3 today when the news announcement came out. So as you can see, this was yesterday's closing price down here at the purple line. This zone that we were trading in looks so small in comparison to what happened once the news came out, but we had a very strong uptrend to the upside, and we ran from about 36,980 all the way up to around 37,350 at the time when I took this screenshot. And right now we're sitting up at around, what was the high for the day? So the high so far was 37,450. So we had a nice little 450 point move just off of that news announcement. And what I want to talk about is how tricky an uptrend can really be, because I came into this uptrend not with the intentions of taking any trades, but just saying, okay, I want to see a very good higher low start to form. And if I see a good higher low, that's when I'll get in and participate, because what I really did not want to do, I did not want to give back any of the profits that I made so far, because I've had plenty of days where I was up by a good amount, and then I just kept going and kept going instead of just calling it a day and locking those profits in. And I ended up giving back sometimes a big chunk of it and sometimes all of the profits that I made. So today I was very conservative in the afternoon session because I wanted to keep all of the gains that I had from earlier. So I was using very conservative entries, and it just prevented me from being able to participate at a lot of these higher lows. Now this higher low right here, I didn't really see the retest that I wanted, but I did see the retest that I wanted right here. I tried to get in, but every time I would get in, I would probably have my entry around maybe 2 to 4 ticks below whatever the low was for that higher low setup. And every time price would come back, it would probably come back within maybe 2 to 3 points of where I was trying to get in, and then it would reverse and continue moving on without me. And I think I did a very, very good job of just being patient and not chasing the market up, because I missed this higher low here, I missed the next one, the third one, the fourth one, and the fifth one, and I finally was able to catch what I was looking for on higher low number 6 at higher low C right here. So that right there, I think I'm very proud of myself for just having enough discipline to not chase it, because look at how long I had to wait. The announcement came out at 2 o'clock. I didn't take my trade until around 2:45. So for 45 minutes, I was just sitting here, not getting the orders that I wanted, but still having to just say, okay, I didn't get that trade, but I still have to wait for the next best opportunity. And I had to do that for a very long time. And when you're in the market, sometimes that's what it takes. So let's go ahead and talk about trade number 5 and talk about what went on right here. So at trade 5, I went long here during a strong uptrend as prices came back to retest the support of higher low C. So when it comes to a higher low setup, that's pretty much exactly what I'm looking for. And when it comes to a very strong uptrend, the higher low setup tends to perform very well, because the higher low setup is really tailor made to participate during a very strong uptrend, and it'll get you in at very good spots where if you wanted to, you could go long right there and hold it until you see a sell signal. Now for me, my sell signal was my scalp target being hit. So that's the reason I took this trade right here at 5 and got out towards the orange triangle. And it looks like a very small trade, but this was my normal 20-point target that I was aiming for. So once I was able to lock that in, I thought about continuing. Like, yeah, I know the trend is probably going to keep going up, but in terms of where I was for the day, I hit my profit goal. So as much as I wanted to continue to keep going, I had to be disciplined and I had to stick to my plan. If you reach your goals, it doesn't matter what happens after that. You close up shop for that day and you come back tomorrow and do it one more time. So that's pretty much the idea I had right there at 5, and that's why I decided to stop. So overall, I would say today was a very good day. I think this is one of the few days in a very, very, very long time where every trade that I made was profitable. So I'm not mad at that. I'm proud about that, but I still want to go back to just focus on trade 1, because when it comes to a range, you got to remember that you have to buy towards the extremes of the range. If you're going long or short or opening really opening any position in the middle of an overall zone, you're just opening yourself up to too much risk. So that's the one thing I need to clean up, because who knows what tomorrow and Friday will look like. What if tomorrow and Friday are zone days, both of them? If I take this same type of trade entry into a zone day tomorrow or on Friday, I'll probably get ate up, because when you take trades like this from the middle, it could go to the upside, it could go to the downside. You're really opening yourself up to a whole lot of risk that you don't have to take. So when it comes to a range or a zone, just make sure you always trade those from the extremes. If you're looking to go long from the bottom of the zone. If you're looking to go short from the top of the zone, and that's all you should be doing. So that's pretty much all I have for you guys today. I hope you learned a lot about using the higher low strategy in a very strong uptrend, as well as the proper ways to trade a zone or trade a range when you are trying to trade that. And I'll be back tomorrow on December 14th, 2023, ready to run it back one more time. But until then, you guys, have a good one, study hard, and take it easy.